Today, let's talk about the positive volume index, or as it is known in its short name, the PVI. Volume-based indicator that all its purpose is super simple, and that to show you when the volumes are actually increased. So this indicator compares the price and the volumes during the specific bars. By doing so, it shows the increasing value or decreasing value when the volumes of the current bar are bigger than the previous one. So if the price increases and the volume, the PVI, increases as well, it indicates a strong bullish control. Buyers are pushing the prices higher, the price is making higher highs. The PVI indicator, the positive volume index indicator, shows increased levels, values as well. It is a strong indication buyers are in control. If the PVI is going down and the price is going down, it is simply showing that the volumes are increased by the sellers, and therefore the values align between the price and the indicator. So let's see, where do we find this indicator and how do we read it on the chart? So you go to the indicator section, volume, and you would see here the positive volume index. When you click on that, you would see that it is applied to compare the bar based on the close price. This is by default. You can design it as you would like, the color, the style, the thickness of the line, and of course choose the visibility on what time frames and chart types it would be visible for you. And if you would like, you can add levels as well. So I just click OK, but I have two here. I will remove one. When you click OK, this is what you see. So here is how we read the PVI indicator. When the prices go up, increase, making higher highs, and the PVI increase, making higher highs, we are in a healthy, bullish market, controlled fully by the buyers. And when these conditions are aligned, and as long as they continue, we are in an uptrend, and we should be focused on looking for buy opportunities. On the mirrored scenario, on the opposite direction, when we are in a bearish market and we see lower highs, lower lows on the price, and that corresponds, at that point you can see it doesn't happen, it is a flat move here. But at some point we start to see lower highs, lower lows also on the PVI, which means the volumes increase as the price go down. The control is bearish, and therefore we expect to see bearish continuation. Sellers are in control. When nothing happens, when the price moves but the volumes are not increasing, the PVI indicator would go flat, like it happens to be here, for example. You can see the price moves, candles making lower highs, lower lows, but the volumes are not there. So the PVI indicator would remain flat here and here and here and here. Okay, these are the flat conditions where the volumes is not increasing with the price. So in these conditions, you would want to avoid that. Traders use that to validate trends. This is the best combination. When the trend is clean, you have sequence of highs and lows going in the same direction, and the volumes increase. This is the perfect conditions. That's the conditions you would want to participate. And traders also use this indicator to validate breakouts. For example, when you have, as you can see here, low, high, low on the market, and then we break above this resistance zone, and look what happens on the PVI indicator. It increases the volumes, it increases the values, and the breakout here happens to be simultaneously aligned perfectly with the break on the price. This is a great validation of the breakout, that the buyers are most likely real and the price has a great potential to push further upside and reach the next important highs and important levels on the rally. So this indicator is simple to read, simple to use, and a great verification and confirmation for trends, for flat market with low volumes, and for valid and for perfect, I would say, breakout confirmed by volumes. If you enjoy our content, if you would like to learn more, make sure you follow our channel.